It is teacher Shoppi Eria from Wona Education Services. I welcome you all, our learners, to this lesson. Today we are going to be discussing Senior 3 Entrepreneurship, the theme Business Management. The topic is Introduction to the Principles of Accounting. The subtopic is Bookkeeping. Now we have found many difficulties as students discussing some or understanding some of the concepts we use in bookkeeping or accounting. So in today's lesson, I'm going to be discussing, elaborating and discussing for you the meaning of some of the terms we use in accounting. Okay, so our theme is business management. The topic is introduction to principles of accounting. The subtopic is bookkeeping. So common terms used in bookkeeping and accounting. The first is we have a term called an account. Now we define an account as an illustration that helps to record transactions relating to a particular asset, liability, capital, revenue, and expenses, among others. For instance, in accounting, we shall be having what we call cash account, and this account records cash transactions. Then we shall be having what we call a sales account. It records all transactions that involve selling of goods and services. Then we have what we call a purchase account. It is an account you're going to be recording transactions that involved purchases or buying goods and many other accounts. So an account is just an illustration, as we're going to be seeing. It is just an illustration that records specified or particular asset. If I talk about an asset, we mean an asset refers to an item, a resource, or a commodity that belongs to the business that facilitates its profit earning and earning of more incomes for a given period of time. Then capital is that income or that money or resources you use to open up a business. Then liability, it is a financial obligation payable by the business in a specified period of time. Rather, it is even called a debt, meaning a liability is a debt to the business, or receipts payable by the business. Then revenue are those incomes received by the business from its operations in a given period of time. Then expenses are those incomes spent on purchases and other expenses in the businesses. Okay, that is the meaning of an account. So an account is just an illustration, as we're going to be seeing them in the principles of accounting and the bookkeeping section. That is our first term. Now the second term is the meaning of a transaction. Now a transaction just refers to a business dealing between two or more parties involving exchange of goods and services using money as a medium of exchange. If you meet somewhere, if you meet anywhere and transact and exchange a good or a commodity or a service and you exchange money, that is a transaction. A transaction doesn't only happen in markets, it happens everywhere where we are. So a transaction is that dealing, it is that exchange between one or more parties. If there is involvement of exchange of money, meaning it is a transaction. So we're going to be finding those terms in bookkeeping or accounting. Then the third term is a business. A business just refers to any item one performs, any activity one performs with the aim of earning profit. Even if you just go and shop or buy 10 pens and sell them to your friends, meaning you've carried out what we call business, if your aim is earning profit. So any activity one performs with the aim of making profits is a business. Okay, the other term is, I'm going to be discussing the other term. Our fourth term is goods. A good is a visible and tangible item that the business buys and sells with the aim of earning profit. There are two words here, visible and tangible. The meaning of visible is it can be seen. Then the meaning of tangible, you can touch. So a good, it is an item that can be seen and touched. So any transaction that involves any commodity that is visible and tangible, that is a good. So for examples of good, you know them, we have cement, paints and all that. Those are all goods. They should be visible and tangible. Then we have what we call we have our other term as capital. Capital refers to the value of money and physical assets one uses to start or run a business. Start and run a business. The money you use to start and run a business is called capital. Let's say you have a dream of opening up a school, and you get chance of, let's say, getting 30 million. So that 30 million, if you use it to open up a school, meaning your capital was 30 million. And back here, under the goods, we said goods is any visible and tangible item that the business buys and sells with the aim of earning a profit. If the good is not visible and not tangible, it becomes a service. Okay, so we define a service as any invisible and intangible item that is bought or sold with the aim of making profits. Like services like teaching, medical care, those are all services. Okay, then our sixth term is a drawing. Our sixth term is a drawing. So drawings just refer to the amount of goods or cash taken out of the business by the owner for his private or business use. If a business owner withdraws money from the business for either personal or private or business use, we call that a drawing. We have two examples of drawings. We have what we call drawings for personal use and drawings for business use. So if a business owner withdraws money and takes it out of the business for his personal use, that is called a private drawing. Then if he withdraws money for business use or for the consumption of the business, that is called a business drawing. Okay, that is our sixth term. Then our seventh term is purchases. Purchases just refer to the number of items that are bought for resale with a motive of making profits. If you own a merchandise, let's say a shop selling, let's say these final goods. Let's say if you buy sugar, you buy all those home consumables, but your aim is reselling them and earning profit, that is a purchase. If you go buy, let's say, clothes in your boutique for the aim of reselling them and earning profits, that is a purchase, meaning you've made a purchase. You're going to be seeing all these terms in accounting. We're discussing them before we tackle the accounting part. Then our eighth term is sales. Sales just refers to the amount of goods sold in the business during a given period of time. Sales are often also called or referred to as sales turnover or turnover. So the amount of goods sold in the business during a given period of time is what we call sales. All businesses wish or always make sales or sell off their goods, and those are called sales. It is also referred to as turnover. So if you find the word turnover also means sales, those amount of goods sold by the business in a given period of time. Okay, then we have what we call debtors. Debtors, these are people, firms, companies that owe money. Debtors are those individuals that buy goods on credit with the hope of paying at a future date. If I own a shop and a friend of mine comes and takes good without paying, meaning he becomes my debtor, meaning I demand him. It is the business demanding that person. So those people are called debtors. For example, if Anisha buys goods on credit from Enoka, then Anisha is Enoka's debtor. If Anisha buys goods on credit from Enoka, then Anisha is Enoka's debtor, meaning it is meaning Enoka demands Anisha, that is a debtor. Then we have types of debtors. We have what we call a doubtful debtor. A doubtful debtor It is that person or debtors that the business is not sure whether they will pay their debts or not. If your friend takes goods on credit, he becomes, and you very well know that he's not good at paying, meaning that person becomes a doubtful debtor. You're not sure whether he will pay your money for the goods he took on credit or not. So he becomes a doubtful debtor. That is a type of a debtor. Then the last type of debtor is bad debtor. Bad debtors are those individuals that the business is sure that they will not pay the debts for the goods acquired on credit. A bad debtor, you're not just sure that maybe he will pay or not pay, but a bad debtor, you're sure that he will not pay. You're sure that the person won't pay, so you have no hope of getting the money for the goods he took on credit. Okay, those are some of our terms. I'm going to be sharing more in our next episode. This is Tisha Shoppi Eria from Wona Education Services. I advise you to go and download work from our website, Wona Education Services, and also reach out on our different media platforms, Facebook, TikTok, and enjoy our esteemed services. Thank you for listening.